right. We are live. Special guest, my buddy Mike Petras, real estate agent out in Idaho. I know that Idaho's been in the news over the last couple of years. You know, the markets that always garner that attention, right? It's like Boise, Idaho, Phoenix, Arizona, some of the Florida markets where price growth has been off the charts. So, personal buddy of mine, one of many people who left California for greener pastures. So we won't talk politics. We won't talk California and reasons for leaving, but we should talk real estate because I'm sure people want to hear, you know, from somebody with boots on the ground. That's the thing, is like I can read stats and I can talk to people or pull up an article about what's going on in the Idaho real estate market. But you're a realtor with boots on the ground, talking to buyers and sellers every day. I guess first off, maybe a 30-second introduction on who you are, then let's talk about some real estate.
All right, fantastic. Well, first off, hey, Matt, thank you so much for allowing me on. I'm truly, truly honored to be on this YouTube live channel and to answer anybody's questions about the Boise, Idaho area, which is better known as the Treasure Valley, first off. So we got different valleys with different names all over the state, and it's just kind of keeps it interesting. But my name is Mike Petras. I am a realtor with NextHome Treasure Valley here in Meridian, Idaho, and I'm actually located in Star, Idaho, which is on the northern end of the Treasure Valley. Small little rural town, but it is growing quickly. And in fact, my little community that I moved to is the fastest growing community in all of the state of Idaho. So really, really crazy. I've known Matt here for quite some time. When I did first meet him, I was a home inspector out in the Sacramento area. And I moved up here and brought that business with me, and am still one of the 8 master inspectors here in the Treasure Valley, which makes me really the only realtor in the entire Treasure Valley that has that capability of, has the background of being a home inspector and a realtor alike. I have been really in the real estate industry and just on a different division of it, but for about 17 some odd years. So I really enjoy this line of work. I enjoy the great people to work with, especially, you, Matt, miss you a ton.
Yeah.
And, but like you said, moving on to greener pastures and moving up to the state of Idaho. So that about kind of sums me up.
Yeah, that's awesome, man. It's cool to hear. And I find it fascinating because I work with hundreds of real estate agents. And I think that the cool part is agents who have worked in some other facet of real estate, right? I've got an agent friend who was a best in class appraiser, right? So they appraised hundreds of homes, became a real estate agent. So even when they were brand new to real estate, they weren't brand new to real estate, right? On the agent side, brought all that appraisal experience to really, provide a bunch of value to their clients. And I'm sure on your side, it's the same, where it's like, hey, listen, I've crawled under hundreds of homes. So I know a few things about real estate. I might have just got my license, a few years ago, but as far as real estate goes, like you said, you've been in it and around it for 17 plus years. I'd love to talk specifically about Idaho and what you're seeing there. When you say fastest growing piece of Idaho, like over the last 2 years, when we've seen some of these astronomical numbers, 25, 28, 30% home price appreciation, what are rough appreciation numbers for the area that you're describing? Was like Northern Treasure Valley or something you said?
Well, I mean, the Treasure Valley as a whole is just called basically the greater Boise, Idaho area. And really the definition of Treasure Valley will even kind of go to the Oregon border and work itself in. And the definition, or they just came up with that name, and it wasn't because they were like picking up treasure or gems or anything like that. It was just actually the economy back in the 50s. So they ended up coining Treasure Valley because the economy was just kind of booming. Now I am actually located in Ada County. The Treasure Valley is split up, a couple of different directions. So you got Ada County and you got Canyon County mainly. Okay. And that's where you're going to find other towns like Meridian, Kuna, Nampa, Caldwell, Nampa, Middleton, Emmett. Okay. And really that's kind of like the central hub of the market, if that kind of answers your questions in terms of how this entire area is really kind of making it all work together. Now, of course, Ada County, excuse me. Ada County is going to be a little bit more on like the higher median and home price. than you would find over in Canyon County. But it just kind of depends on, where somebody really kind of wants to be, but they're all within striking distance of one another and major, work hubs, etc., like that. I hope that's answering your question.
Yeah, well, I want to know specifically if
Mhm.
like home price appreciation in that area,
Oh,
year on year, because I know that I've seen some things where it's like 60% over the last 2 years, like back to back 30% home price appreciation.
Well, we didn't get that high, but we definitely were the top in the nation, and I guess if that's what we're considering an overall equity growth, I know Ada County here in 2019 saw, I think, around 22.2%, and I know for a fact in late 2020 to 2021, we came up 23.7%, which was the highest in the nation. Our equity growth was just crazy. Really, of course, we know that the markets are all controlled by supply and demand. And once COVID hit, once it came in, our supply went to nothing and our demand went through the absolute roof. And it sucked us down all the way to 6 days of inventory. And if you were selling, even say a year later, you could basically write whatever number you wanted in, and somebody would say, okay, well, I'll probably go after that. Most likely not. I'm over exaggerating, but
Right.
I'm just kind of, leveling how the demand here was for Idaho. In fact, we weren't number one in terms of the migration places in the United States. We were within the top 10. I believe that we're like number 7 overall with the people really moving in here. But we got a general amount of Californians, that came in here, especially during 2020, 2021, which kind of stripped it a little bit more than, say, people that were going to Texas. So just, coupled up with no inventory back then and plus huge demand, it just absolutely skyrocketed the prices here. And I made a good move when I moved back here in 2018. I got to ride that wave. It was absolutely insane.
Yeah.
So we have basically doubled our prices since 2019 of what you could have bought a house for back then.
Yeah. And that's the thing for like, a math guy like me, as I'm doing the numbers in my head. If you saw 2 or 3 years of 20 to 25% home price appreciation, you're going from 300 to 375 to 475, all the way up to 600. 300 to 600 in a 3-year period. You could have doubled in price, which is, bonkers to think about. I'm curious too, like not a specific number, but just like your feel. I've read that, obviously during COVID, people were able to work from home. And so people started to, migrate to places where like, what, I can buy more house, I can get more land. The pace of living might be a little bit slower. And they were able to choose kind of where they lived. And they could work remote from anywhere.
Mm-hmm.
I've heard this and I haven't really looked at the stats to back it up. Do you think that that's slowing and that some companies are bringing people back to work where, they can't necessarily work remote, and that might slow future growth for Boise? Or is Boise just like a place people want to live and you see, future demand continuing?
Okay, well, that is a stacked question. Okay, in terms of do I still see people coming in, from out of state with jobs here? Absolutely. In fact, we were considered we were considered the most overvalued market in the entire United States. And of course, they factor that in from the median home price to what somebody makes in their median income. Well, what they were really factoring in was the people, of course, coming in here buying in cash, retiring, etc., but also those people that were coming in with jobs from out of state. So that's really kind of not factored in there, which is a little bit unfair. A lot of other people, though, they are moving here because we are the least regulated state in the entire union. That is very, very, very attractive for especially people coming from California that's got the most regulations slapped on them humanly possible. Okay, we get.
Hey, don't challenge California, politicians, because they'll put more on there. If you say it's the most humanly possible, they might just find some new stuff to regulate.
And I'm not trying to make this political. I'm really, really not. Okay, but we have budget surplus out here of $1.8 billion. We really take care of our state well. Let's just talk about energy if you want to. All of our infrastructure is constantly taken care of, and 70% of our energy is on hydroelectric, which is renewable, which is something that California's been shooting after forever. but California Idaho got it right. Okay. And which actually makes our overall bills the cheapest in the nation. We really are the cheapest in the nation when it comes to your overall living expenses. So, I mean, are people still moving here with jobs from out of state? And can you get more bang for your buck, out here than you could in California, and that slower pace of living that you're talking about? Absolutely. Okay. I mean, have our prices, shot through the roof, over the last couple of years? Absolutely, they have. I'm not going to sit here and say that they haven't. And actually, I've got some graphs and all that here. I'll show you in a few, just to kind of show you, what the market did look like all the way from 2019 to today. But either way, this is just a highly desirable place to move. We still got a lot of migration patterns, especially from like San Diego in California. That's still our hugest migration pattern. We get the Bay Area, Sacramento, Placer's another big one of that, Placer County, Washington, Oregon, of course. Texas is a funny one. So we're actually getting quite a few people coming in from Texas.
Wow.
And that one kind of shocked me when I saw that migratory statistic. I was like, really? Well, you're going from, a free state or, free state to free state, a red state to a red state, and just kind of boggled my mind a little bit how I was seeing people come in from Texas. But we still have that demand, but that buyer's demand has definitely cooled. Okay.
Right,
I think
right.
you know that.
Yeah.
I know that.
Being a mortgage guy, I know what, going from 2.75 to 5% will do to affordability. And so that's something that no, state or county is immune to. Like,
Exactly.
less folks are going to qualify and demand is going to, like, that's literally what the Fed set out to do is cool demand. And they've done it, right?
They've done it. Exactly. And I was just about to say the CPI is the other flip side of that coin, and the federal funds rate. I mean, as long as you're generally not taking out new credit cards, new car loans, stuff like that, you're not going to really be hurt per se. Okay. But the federal funds rate is to do that. There's just too many dollars out there buying up too little products. They want to get that money out of there. They want you to, spend your savings instead of taking out new loans, slow the demand. Okay. And that also comes into play along with the mortgage rates. So, but I'm seeing some good indications, especially, well, maybe not so much of the CPI because, that ticked up another 0.4 of a point. And I asked myself the question, does the Fed really kind of have what it takes right now to, quelch the CPI? They did say last month, well, hey, we can go ahead. We anticipate that we'll cap it by July. And that didn't happen. Okay, so coming up another 0.75 point. Personally, in my opinion, I think they should have went up a full point and make it a little bit tougher on us. And about 75% of the economists out there think the federal funds rate should sit at 5 to 7%.
Yeah. And just to simplify that for everybody listening, because we like to keep it simple on YouTube, especially
sorry.
CPI. He means inflation. Consumer price index inflation. And when he says it went up 0.4%, went from 8.7 to 9.1. So, the Fed's, like, one of their main goals is to bring that 9.1% inflation down to a 2% target, by making the cost of capital more expensive, by raising interest rates. They're eventually going to do that, in my opinion. And, over the course of September's meeting and future meetings, as they continue to raise, what is it now? Like 2.5%, the Fed funds rate?
It's 2.25 to 2.5.
Right.
That's where it's standing right now.
They keep that range. And so, they've got, 3.5 to 4% kind of targeted in the September meeting. They might go 0.5 point, but whatever the case, it's for sure affecting the housing market. And if we're talking just real estate and mortgage, mortgage rates have gone up. It's hurt affordability. It's cooled demand. And we could probably get into that. I'd love to see some of your charts. Before we do, I just want to answer. Joey Garesi is a good buddy of mine from Oklahoma. I would consider this guy a super friend, maybe, because he's a buddy that we've chatted offline quite a bit. He said he's tuning in. Thanks for joining, Michael. And I want to answer this question just because this is something that we just dealt with. I've got a question for you. Looking to buy another investment property for his current personal residence. His wife is the only one on the mortgage, and she pays for it from her bank account. What you want to keep in mind, Joey, is you can exclude a mortgage if you show the person who's obligated to it, she's the only one on the loan, a 12-month history of her paying it from a personal bank account. Where you're going to run into issues is in two different areas. One it's probably coming from a joint account, right, that you're also on. Or two, if you're in a state like California, it's a community property state, more than likely you're going to be hit with that mortgage debt because it's community property. You might not be on the loan, but you're probably on title, community property between you and your wife. Go ahead and shoot me something offline, team@mtmg.com, and I'll look at it. But don't think like your follow-up question was like, it doesn't pop up in my credit report. That doesn't mean the underwriter's not going to find it. That doesn't mean that like you're not going to show up on a property search and you're on title. Then they're going to look at, okay, what loan is associated with that and whatnot. So it's going to vary by state, whether or not it's community property. It's going to vary by if this other person pays it, and you can document 12 months of payments from an account that's just theirs. But that might even not be enough. I'm trying to think of whether or not we're able to exclude it on this last deal we got. It's a little bit convoluted, but we're happy to help. I'll post real quick, team@mtmg.com. Do you have the ability to share some stuff, Mike? Because I'd be
Sure.
game to see some of these
Absolutely. Let me
some
go
of
ahead
these
and
graphs
share
you
my
got.
screen
Let's
here.
dig
Well,
into some real estate graphs.
well, you know what I got to do is I got to, you know what I didn't set up here was how to get to my PowerPoint presentation. Whoops. Okay, so I'll go ahead and figure that one out, but I can go ahead and share my screen here and just kind of go off of Altos research. But what I really did want to show you though was how I do on my monthly market updates that I do every single month. So please subscribe to my YouTube channel. And I break all this down. So I take all the data from the MLS. Okay. And I roll through, and I also keep it, in touch with that data on a weekly basis to know where our market really kind of stands. But Altus Research, can you guys see the screen?
There we go. Add to stream.
Okay.
Bam.
There we go. Okay. Bam. Okay. So I always like kind of keeping in tune with this, because Altus Research also does take, directly off of MLSs nationwide. And this is how they have their proprietary software that just kind of lets you know what's going on. Now, I did say back actually early this year, a little bit, I made my predictions, and my predictions were actually right. I was like, wow, I figured that the market correction would come towards late Q2, early Q3 here in the Treasure Valley, and it has shown up. Our buyers' demand has definitely tapered off, and our inventory has shot up. But it's not really because we have a lot of sellers, okay, that are really going out of the ordinary to try and sell their properties, as much as it is the buyer demand has just really kind of tapered off. And we're seeing some of the, really interesting price decreases out here across all of our stuff. But I mean, if we're kind of taking a look at what's happening in our market currently, okay, and that's where I need to get to the PowerPoint presentation to show you what's happened over the last few years, which I will work on, okay? But let me show you what's happening right now here, is that you can see that some of the median list prices, they are coming down, okay? And in fact, some of the stats, especially like out here in Ada County, which would include like Star, Meridian, Boise, some of the bigger, cities, and Kuna around the Treasure Valley, we actually rose about 14% since the first of the year, but it's been starting to chip away. Last month alone, they lost 2.8% in Ada County. If we're looking over at Canyon County, where Caldwell and Nampa would be, it rose 12% since the first of the year, but has lost 6% since then. And you can really kind of see it in the median list price. If we look over here, you can see the stars dumped down. Okay, over the last few months, you can see that the price decreases that are on all the active listings are coming up too as well. But some of these cities are starting to flatline a little bit, and maybe, because the interest rate is starting to come down a little bit. So we'll see if the buyers return to the market. But one of the biggest things I want to show you over here would be what they have as known as their market action index. Okay, and that just kind of letting you know how many buyers really kind of are out there doing what they're doing. And you can see that that's really tapering off. And we're actually slipping here in Star, Idaho, where I live, over into that buyer's market. It's really starting to cool itself. Even over in Boise, you can see the median list price is coming down too as well. Average days on market are going up. Price decreases are sitting at about 61%, and the market action index is dipping down. And of course, Boise is our largest city that we have. Okay, sitting at about, I think it's like about 250,000 people. Meridian would be at about 100,000 people. Eagle is actually probably our nicest area. It's really, if I can compare it for you, Matt, it's like the Granite Bay of the Treasure Valley.
Sacramento, yeah.
It's just beautiful properties out there, multi-million-dollar properties, multi-million-dollar ranches. okay, too, that just have incredible views, and it's a very, very desirable place to live, but you're going to pay for it, unfortunately. And the median list price is slipping down in Eagle too, as well. I would actually think that Eagle will probably, dump into the buyer's market a little earlier than any of the other cities, just because of how much it generally costs. But if we can see, our price decrease is still sitting at about 64% of all the active listings out there, and our market action index is still on the slip. So we do have that market correction here. Meridian, and I'll start kind of plowing through these because it's like the same general trend. Median list price is coming down, price decreases are on the way up, and the market action index is going down. Kuna will be another one of those cities here in the Treasure Valley that will see that too as well with the buyer's market shift. Napa's kind of, still kind of hold on because it's a little, Napa and Caldwell and anything in Canyon County is going to be on the cheaper side when it comes down to like the median home price, if you're just looking at that. Of course, Napa and Caldwell does have its very ritzy places, just mainly like ranches on a bunch of acreage, out there. But, again, the same pattern arises here. Same pattern too in Caldwell. Middleton is another one. And then, of course, Emmett's right over Freeze Out Hill, north of me from Star. And a lot of people like to say that's not a part of the Treasure Valley. It's like, but yes, it is. And it's really, really gorgeous out there. If you wanted to find ranches and a ranch lifestyle with a nice rural downtown, Emmett is definitely where you'd want to be. But that is basically kind of showing you what's currently happening here. And if I can figure out how to get back.
That's really cool, dude. I put up a link to your YouTube channel, so it's in the comments.
Thank you.
You know what's funny is when you say your Star Realtor,
Mm-hmm.
Star is like one of the counties?
No, Star is a city.
Oh, okay, it's a city. Okay. I just thought you were a star, bro. And I'm like, yeah, this guy's the Star Realtor out there in Idaho, but it's actually a county. So, I learn something new every day.
Actually, it's not even a county. It's my little city where I live.
Oh, okay.
Star, Idaho. Yeah.
Okay.
So
Star, Idaho. Look at you, man. You a star and star.
I just kind of went with that one on purpose. So yeah. I'm trying to still figure out how I can share the other screen here real quick to where I can show you all.
If you want to try to figure that out, I love the fact that you're using Altos Research, because Altos Research is really the source for the truth. And it's crazy to look at what's going on in your market and really be able to compare it to Sacramento. Any market that's seen a lot of growth, it makes sense to me that the more drastic the growth we've seen in the last 2 years, the more likely it is that you're going to see a revert to normal correction, whatever the heck you want to call it, right? A lot of folks are scared to death that we're going to see 60% home price depreciation. I don't think there's any chance. But when you go from 25% year over year and the market becomes flat, it feels like a sharp right turn, because it is. And I'm surprised when I look at Sacramento stats that as much of a turn that we've seen, like it feels pretty drastic with the slowdown in demand. It's not as drastic as the stuff that's going on in Idaho. Let me see. I'll share my screen because I happen to have Altos Sacramento stuff just queued up on my side too, and like this barometer that you talked about, the market action index, for anybody who might have missed it, if you're at 100, you're in a really strong seller's market, and it's all the way here to the right. As you go down and go below 30, you're in a buyer's market. This shows 62, but the thing to consider is that it feels like a buyer's market because of how far right we've been. We've been like in the craziest of times where it took 100,000 above list, all your contingencies waived, firstborn child and everything else to get an offer accepted. Now that we're in like what some would still consider a seller's market, and by this market action index, Sacramento would be that, it is so much easier to buy a house. I'm actually seeing seller concessions on every other deal. I'm seeing contingencies in place. And, like you mentioned, there's price reductions or list price, drops, doesn't necessarily mean that prices are coming down, just that they're starting them too high or unrealistic when they first come to market. But this is 62. I can tell you that today inventory in Sacramento is like 1.75 months. And so the trajectory of that inventory, if it continues, we're going to come down. A lot of those Idaho markets were in the 30s or 40s. So inching closer and closer to what would be considered, by this metric, a true buyer's market. Really, for me, this is inventory too, which is like, I was looking at this morning, highest it's been since back in December, or this is October of 2019. And this is a July stat. So we've still got August, September, October as inventory generally increases to surpass what we have inventory wise, knowing that 1.75 months is still not a lot. But still interesting stuff to follow nonetheless. I think this is good information for buyers, for investors, for anybody looking at real estate. Follow inventory in your market, follow days on market. As these things continue to increase, it just makes it easier as a buyer. You have more time, you have more negotiating power. You have all the things that you're missing in 2020 and 2021. The only thing I can't give you anymore is a 2.75% or 2.5% 30-year fixed. That's the only thing that we're missing. But all your dreams came true if you were saying, I wish it wasn't so hard to buy a house. I wish I didn't have to go against 25 offers.
And that is absolutely correct with everything you said. In our market, yes. I mean, we got more inventory than you guys do in terms of month overall, but it's the same pattern. Everything that you just said was completely right on. And in fact, I think I just figured out, how to share my screen here so that we can get my PowerPoint presentation up. Let's see if I can figure it out. Maybe not. Okay, maybe
Come on, PowerPoint.
I'm trying to get my little toolbar to pop up here, and it's decide not to want to do that for me. So if you want to keep on talking, I'll see if I can figure this out.
Windows, I'd love to hear questions. I know.
There we go.
Oh, you got it?
I think I got it. Can you see it?
Right now, I still see the picture of us in there.
Oh, you do? Okay.
Yeah.
Well,
so like when you're trying to pull it up, does it pull it up again? Because then it'll have me like add to stream.
Oh, well, now I got to find you again here. Oh, let's see, share.
Technology's hard, man.
Sometimes, Zoom kind of makes it a little bit easier, I guess. Oh, here we go. Let me see if I can go ahead and share this. Okay, now do we have a PowerPoint presentation?
Yes, sir. Look at that beauty
right there. Okay, there we go. Okay, so let's go ahead and let's dive into, really what's kind of happening, here. Now, these stats do reflect June, but the MLS does come out with a monthly deal to where they break it all down for us. But of course, like I said, I pay attention to it weekly, so I'll give you just an update on what has kind of happened up to date. But if we're looking all the way back here since 2019, if you guys can see my mouse, I mean, look, we're just a little bit above 300,000 at the median home price, and we shot all the way up beyond 600,000 here in Ada County. But you can actually see it, coming back down because of the market correction that we talked about. We did have this was basically the point where COVID set in, and we'll see that in the inventory graphs as we get along. But look at that, all the way from basically March of 2020 to July of 21 until we started kind of hitting, a flat spot. We really did plateau for a while there. And then come the beginning of this year, we just started jumping up again. But if we're looking kind of like at the, the overall prices, and to show you a little bit more of that market correction, as I mentioned, since the beginning of the year in Ada County, we started at 540,000, worked up ourselves to a peak at 602, which raised us up 14%. And as of June, we came down and lost 2.85%, coming back down to the median home price. Okay, I like to, of course, show you the actives versus solds. If we're taking a look here at the end, you can see the buyer's demand is definitely tickled down. And another big indicator of that is when you take a look at the pendings. How many's under contract? That's coming on its way down. And just look at that absolute shoot and spike in the inventory.
Yeah, boom. I think it's worth repeating here, Mike, because the same thing is happening in Sacramento is happening where you're at. and people should be paying attention to this. It's not an influx of listings that's causing that spike in inventory. The spike in inventory, things are selling slower, so things are stacking up, right? If you go from, like you said, at the bottom, it was 6 days on market and they're selling. Now, if you start to be 15 days on market, 20 days on market, 25 days on market, inventory will stack up and you'll see that big increase. In Sacramento, Ryan Lundquist, mutual buddy of ours,
love Ryan.
Did some cool graphs where if you look at 18, 19, 20, 21, I'm sorry, 19, 20, 20, 21, 22, whatever. It's like the last 4 years. Over 21 and 22, less inventory is coming to market than was in 19 and 20. But inventory is up because it's selling slower. And so that's something that people should be aware of, is that like you shouldn't automatically assume like, oh my gosh, why is everyone listing their house for sale? Is it foreclosures? Is it this? Is it that? It's not the case. We have more inventory because things are selling slower.
Well, absolutely, 100%. The buyer's market is cooled. In fact, actually, we're within one of the top 10 cities right now, according to CNBC, of the most cooled market. Okay, overall. So we can definitely feel that. But yeah, with the CPI being as high as it is, people, getting squeezed for food, gas, all that. Plus, then on top of that, a higher interest rate. Of course, it's going to cool the buyer's market. But now the interest rates are coming back down. I'm actually seeing the buyer's market return. Of course, we do got the holiday season right around the corner, so we'll see how that kind of levels everything out. But I start to see the buyers starting to jump back into this, and I think that maybe we can touch on that here a little bit later. But it's just kind of back to the graph. I mean, if we take a look here, in March when COVID hit and everything just kind of swept down, I mean, we really got down to 6 days of inventory. That was insane. And look at the spike that went up in July. Okay, when the hot season hit, everybody wanted to move to the Treasure Valley. And the only reason this number was going back down and kind of meeting the supplies because there just wasn't anything to buy. There was no homes, out here. So it just skyrocketed the price. We had a peak last year to where we just kind of saw an inventory, finally surpass the buyer's demand in a while. Okay, and then today, the buyers are cooling off, to this area generally. Because of CPI and interest rates, in my opinion. We'll touch upon that, but it's not just because people are going out and saying, "Hey, I want to sell." Matt, you're absolutely 1,000% right. I mean, if we're looking at our inventory levels that we had in Canyon County, this is just another look at it compared to what we got today. We far surpassed what we had in 2019. Since COVID ended, people are back to work out here. They're building houses. In fact, actually, the new construction, if you're trying to come out here and you're trying to buy, is where you could probably get your best deal. Okay, than going after an existing home quite as yet. And I break that down. So if I'm looking at the existing home inventory, again, same thing. You can see that the buyer's demand is tapering down, especially during hot season, which is really kind of unheard of. Okay, and the inventory is just shooting back up. And if we're looking at the new construction inventory, again, we're kind of tickering down a little bit. Okay. But the demand is still kind of there, but they've got a lot of lots that they're sitting on. And so that's just really adding into that.
I would guess, and I just want to interject real quick, that with this extra inventory, these new home builders are going to start offering incentives. They're going to,
which they are.
Start collaborating with realtors. The joke with realtor friends around this area is, the builders that wouldn't collaborate or didn't need agents for 20 and 21, all of a sudden, the phone lines are back open. They're having agents,
right?
Hey, come show our new development over here. We'll offer you 2.5% or whatever it is. It's funny how that their tune changes real quick.
Remember when we were taking advantage of you when things were really good for us? Mm-hmm. now they're kind of like, oh,
now we want to be your friend again.
Yeah, come on back. Yeah, that really happens. But the incentives are definitely returning. There's actually quite a few builders, and what I'm noticing the pattern out of the builders, of course, is the smaller builders that were out here are the ones, of course, tapering off first. The federal funds rate, of course, being where it's at, it's harder for them to get the products that they're looking for if they're looking for it in loans. So they're the ones actually now starting to kind of turn around and even sell their land inventory that they've got. But the majors are still hanging on, like Corey Barton, Hubble, Toll Brothers. We got them out here. We don't have some of the other builders that you guys are familiar with, like Pulte or KB Home. They're not around. But we got our own division of builders, but they're starting to see it, and they're starting to really, they're offering the incentives. They're starting to slow down. The pre-solds are becoming a lot more put in front than having a spec home already ready and built. Okay. So they're backing off. So the existing homes, just kind of to hit upon this real quick, because I just like to show, how we're in that market correction. Again, here in Andy County, who was really kind of like the big loser here. And the overall, I think the existing homes only lost 2.85% in their overall median price. And if you looked at new construction, this is one actually kind of shocked me when I saw this, was that new construction price in Ada County jumped way up. So somebody out there made, big price increases, probably due to labor shortages or whatever, and said, okay, well, we're going to charge a little bit more for our homes. Or they're just, how median goes. It's from the top to the bottom, and they pick the guy right in the middle. So I'm going to keep an eye on that, but I definitely expect the new construction to go back down. But it said it actually rose at 17.2%. I was like, wow, that's pretty crazy. Our days on market, we'll kind of skip through that. But cancels is one I want to touch on. Looking at people were just like, I don't know if I want to move right now. Okay, so they took their listing right off the market. Well, they end up putting it on. If you look at Altus research, throughout all those different cities that I had, you can see a lot of relistings starting to really kind of take the market.
But yeah, I'd love to have a little bit of conversation around that, because I noticed too, the nationwide number was 60,000 cancellations in the month of June. And it was an all-time high. The crazy part was when I looked at the number and I got some more context, it was 15% of active listings were canceled, which again was a super big number, which I thought was surprising. Then you look at like the trend and the average, and it's like 12 point something, 13%. And so while 15% and 60,000 was a really big number and it stuck out to me, when you look at it in context, it's really only like 10 to 15% above the average. I was trying to, figure out, and my thing is always like, stats don't lie. I just have to figure out, how to connect the dots between stats and the daily conversations I'm having. And so I thought that part of it might have been obviously rates. Somebody gets in a contract and rates had gone up 1% since they got pre-approved. Their lender didn't do a good job, or they didn't do a good job of staying in contact and kind of updating that pre-approval. Then all of a sudden it's like, hey, listen, at 5%, I don't qualify, because when I initially did this pre-approval, it was 3.875. And then that's obviously cancellation because they don't qualify. What I talked about with somebody else having the same conversation was sometimes people did still qualify, but when you show them what that payment looks like, for their $600,000 purchase with 5% down or whatever the case may be, they get some sticker shock and they go, holy cow, like $3,600 a month? That's too much. And they back out because of, not that they can't, but they don't want to proceed with what the loan terms look like with higher interest rates. So obviously something to watch if cancellations continue to be at elevated numbers. I'm always trying to figure out the why, right? Like what's the why behind more and more consumers backing out of these contracts more so than normal. The 60,000 number stuck out, but if the average is 44, 50,000, then it's not like a insanely high number.
Right. And I like to know the whys too. As you can see, I think from generally my presentations here, I'm very analytical.
Yeah.
make sure that I put you in the right spot and be able to kind of let you know what's happening in our markets. And I really like, that in-depth that you just gave. That was really, really awesome. And again, so right on as to maybe why these cancellations are popping up as high as they are, or, and have they really jumped up, the levels that you're talking about? Well, we'll just have to, watch it, wait and see. But our inventory out here is way, way different. So we're actually sitting at in June alone in Ada County, we're sitting at 2.61 months of inventory. And that was rapidly on the rise. That was almost up a full month of inventory from May. Okay. Wow. And looking at the numbers currently, I'm actually anticipating probably the months of inventory might hit high 3s to low 4s, okay, by next month. So, and that's just kind of what I'm going at. But when I was going through the median home prices for existing homes and new construction homes out here, I was also trying to, figure out who kind of like the loser was. And you'll see in Canyon County when we get over there that the new construction is going down a little bit more than the existing homes. But the new construction inventory out here in Ada County is sitting at 3.26 months for the month of June.
Wow.
And that's going to go up. Existing was sitting at 2.34. So it's definitely on the rise. I'll shoot through Canyon County here real quick. Canyon County, so that's where Nampa, Caldwell, those are the two major cities, out there. Middleton is kind of like Star, and it's actually right next to Star. It's on the northern end of the Treasure Valley. But, again, we shot up in price, but just take a look over here. Just look how that median home price just shot down, over the last couple of months. If we're taking a look at the numbers over here, so it did rise 12% since the first of the year, but as of June, it lost 6.61%. And if I put the new factors into it, it's actually at about 7.5% up to date. Okay, from what it lost since the beginning of the year. So now it's also just chipping away at the gains that happened since the beginning of the year. So keep that in mind, buyers. It's already kind of gone up in that aspect, and it's just chipping away at the gains. Again, same pattern. Buyers' demand cooled, pendings coming down, inventory went up, bam. Inventory has hit levels that we haven't seen in, forever, at least since I've been tracking back in 2019, way above. Existing home inventory, again, buyers' demand's cooling, way, way up. Look at the new construction inventory. Look at the buyers' demand at the tail end here in 2022. Bam. Okay, down. And if we're looking at, who's kind of like the biggest loser here when it comes to existing homes versus new construction homes, existing homes rose up 9%. They lost 1%. And if we take a look at the new construction, look at how that shot down too. That shot down from 549 to 512.70 in the median home price. So it lost 7% since its peak. New construction inventory was sitting at 3.86 months, Matt. 3.86 months, almost 4. It will definitely be in the 4s by next month. And the existing homes was sitting at 2.1. But again, a full month's worth of inventory. You had 1.72 months in May and shot up to 2.7 in June. So we're going to be, crushing into that, into that aspect of a buyer's market a lot probably sooner than like a 6%. And let me just kind of go ahead and get out of here, and hopefully I don't cancel everybody out. Can you see me?
Well, there's a little cat emoji where your video usually is. We can still hear you. We can still hear you. Which, we don't get to see that handsome beard anymore, but all great info, which I appreciate, man. And I think, the moral of the story is the real estate market is changing. Mike as a real estate agent isn't hiding from that. Me as a mortgage broker, I'm not hiding from that. I'm also not telling everybody to tuck their tail between their legs, go hide in a corner. There he is. And
you got me back.
You are back, sir.
Okay.
A friend and former client, Alex, in the chat says, "Don't wait to buy and wait, baby." Which,
right?
Here's the thing to remember. I bought in 2006. People told me I was an idiot. That home is halfway home to being paid off. Great tenants. It pays me every month. Not only does it pay me every month, but now we're on the amortization schedule where $600, $700, $800 a month is being taken off of the principal balance, right? So it's appreciating over the long-term horizon. Whether it appreciates in 2023, whether it goes up 5% or 2% or -4, it doesn't matter. Over the long term, it's going to appreciate. It's going to pay me monthly cash flow. It's also going to see 7, 8, 10,000 in what I owe chipped off. And it's not my dollars. It's a tenant's dollars. When I bought in 2017, people said it's the top of the market, don't buy. I bought 2 more in 2019. People said, don't buy. We're definitely at the top now. It's going to crash. I bought in 2020. Truth be told, I was scared. I paid $460 for something that appraised at $430. Again, I won. It's worth 600. 2021, I bought another property. I got that one on an investment loan under 3%. I get to look at that statement every month, and a lot of principal comes off when you get sub 3% mortgage. But the moral of the story is Warren Buffett didn't take years off of investing, and he didn't just say, I only buy, when it's down and I can get the best. Like, you buy always. It doesn't mean you buy anything, right? Right now, you might pay more than you would have paid in 2019. And when I say might, you will, right? But it doesn't mean you can't go out there and find a great deal, get great terms, which 5% on a 30-year fix is still great terms. And real estate is a long play. It's not something that you should be speculating. And it's like Bitcoin, where it's going to quadruple or lose 80% over the next month, right? That's just not what real estate does. It moves a lot slower than that. So,
and I wasn't trying to give the doom and gloom. All I was trying to, basically do here was just say, this is what's happening in my market. Now, if I could see, what is going to happen here is that with these prices starting to tickle down, and especially now that interest rates are starting to come down too as well. Thank God, investors, all that. Okay. You're a mortgage guy. I pay attention to it too. You got more knowledge than I do on that, but I do watch where the numbers are at. But as those, interest rate, as the prices start coming down and interest rates start coming down and giving more people purchase power, this is still a very desirable place to live. And for a variety of reasons, we got great jobs out here. We got good paying jobs out here. It's, again, the least regulated state in the entire U.S. It's very, very popular. Those that want to get out of, states like California, Washington, Oregon.
Trying to recruit my people out of my state.
I am. I'm recruiting your people. Come on into Idaho. Move to America. Oh, sorry. Did I say that out loud? Okay.
I'm gonna get messages. Hey Matt, can I update my pre-approval for California? I'm trying to move to Idaho now. Connect with Mike, which we should take some time. I appreciate all the info. It's friggin' awesome. I put up your channel so that people could find you on YouTube. If people want to reach out to you, if people are interested in Idaho real estate, what's the best way to get in touch with you?
Oh, sure. Well, I mean, you can go ahead and reach out to me at 208-715-STAR. Again, that's 208-715-7827. And of course, if you wanted to begin your home shopping experience, you can go ahead and visit my website at www.yourstarrealtor.com. And just go on there, register, and take a look for homes. He'll show you what's going on. And then on top of that, also, I do have a relocation guide, which is really, really helpful for people that do want to move in for out of state and know about the Treasure Valley before they decide to make that move. And if you go to just any one of my YouTube videos, click in the description and you'll see a link to that relocation guide. Okay, it's going to ask you for your name, your number, your email address, of course, but it will give you the free relocation guide, and my number's all over that thing. If you have any other questions too, just feel free to reach out to me. More than happy to answer them, and more than happy to help you out and get you from A to Z into a home here relocated right in Idaho.
I love it, man. I'm going to see if I can pluck out some questions. Usually there's a lot more Q&A. We had a lot of great info. Thanks to you and those fancy charts. I'm glad you're able to get that stuff working.
Well, but I just wanted to say here real quick, what I wanted to finish off with is, if you are thinking about making a move to Idaho, don't wait. Just like you were saying, don't wait. Okay, this market will continue to go back up, and things are gonna be awesome. Again, it's just going to happen. But sorry, I didn't mean to interrupt you.
Yeah, no worries, man. The Wake Dog, thanks for joining. I appreciate you being here. I'm going to go against the grain and buy while others back out. I may fall flat on my face or win big. I give my odds 50-50. Again, I'm not going to ever proclaim to be a prophet, tell you exactly what's going to happen. But, Wake Dog, just like Warren Buffett, who I mentioned, be greedy when others are fearful, and be fearful when others are greedy. Right now, there's a lot of fearful folks. And for good reason, I would imagine, people as affordability gets stretched and they don't know what's going to go on with the economy and are we entering a recession and whatnot. I don't ever want people to just go out and take a bunch of risk. But real estate is a long-term play. And I've got to continue to preach this, Mike, because I don't think people hear it enough. You don't time the real estate market or time when interest rates are the best. You buy real estate when you're personally in a good place to buy real estate.
Mm-hmm.
You've got your credit in order, you got your budget in order, you're qualified. And that's the main purpose of getting pre-approved with a lender like the Matt the Mortgage Guy team, is we want to show you, here's what you qualify for, but more important than what you qualify for, at $550,000 with 5% down, here's what your mortgage looks like. If you put 10% down, here's what it looks like. How much do you have left over in emergency fund after that 5 or 10% down? What does that monthly payment look like compared to your budget, compared to your current rent? All those things, so that you can be empowered to make an educated decision and say, you know what, now's a good time to buy. Because I can promise you, just like in 2006, as long as I'm able to make that payment and hold real estate long-term, I'm going to win. You're going to win. If you get into a mortgage that's way too big and it stresses you out and it causes, marital problems and causes you to, have a heart attack, not a good thing. But a fixed rate mortgage at a payment that you can afford, you hold that real estate and you're going to win, whether it turns into a rental property, whether you sell it, move up to a different neighborhood, whatever the case may be. I've seen so many people win with real estate that it's tough to watch people, have paralysis, analysis, paralysis, however that thing goes, where year after year after year, they're waiting and waiting and waiting for the perfect time, the perfect time. And then before you know it, we're in 2022. That opportunity they had in 18 is gone. The opportunity they had in 19 is gone. 2020 is gone. And now they're like, well, shoot, maybe I'll wait another 7 years to buy. How much is that going to be in rents? I mean, I don't know. I'd be curious too to hear from you. What are rents doing in Idaho?
Oh, okay. Well, rents were actually in 2020 and 2021 were the highest growing rent rates in the entire U.S. They jumped up and they are still in that direction. They are going absolutely through the roof. So, rentals are expensive. They really are. And the closer that you're going to get to Boise, which is basically, the epicenter where downtown is, a capital, all that, it's going to cost you more. Of course, unless you're going to Eagle, you're getting one of the bigger properties, et cetera, then it can balance it out. But that's basically that deal. I kind of wanted to chime in too on what you were just talking about. I do got some clients that really kind of figure that this market correction that we're seeing right now is going to turn into another 2008. No, it's not going to turn into another 2008. So, I mean, are we going to see, the market kind of correct itself, come down a little bit? Sure. But that was for a whole nother ball of wax. And I got to throw that in there. But you'd be surprised how many clients I've got right now that really are holding on to that, thinking that this is going to be another 2008 correction or another 2008 crash. And the data just doesn't support it with all the protections that were put into place after the subprime mortgage crisis. That's my thoughts.
Yeah, for sure. I missed a couple questions I want to get to. Indianapolis, Indiana market, I honestly don't know. So I won't speak on it, but wanted to tell you thanks for stopping by, Tyler. I appreciate you being here. Reach out to a great agent in Indianapolis, or there's a bunch of great stuff online. The Alto stuff and some of the stuff that we grab is public stuff. Are you seeing new builds not appraised at their contract value? If that happens, is the only option to cover the difference in cash? This is a great question, and really, I'm sure you have some thoughts on this, Mike. New builds are a different kind of animal compared to resale. And so what I would tell you as a buyer, know that as a buyer, you don't pay your buy agent. The listing side, the seller pays the buy agent. So you always want to have representation. If you go into a transaction, a buy side agent is going to be able to negotiate on your behalf. If it doesn't appraise, you're not willing to pay that. Back in 2020 and 2021, you had to. You had to just say, whatever the price is at, I'm in. No matter, I'm going to pay it, right? But in 2022, you got a little bit of negotiating power. You go in and you've got a price. If it doesn't appraise at that, you're going to renegotiate. And truth be told, like Mike's talking about in Idaho, it's the same in a lot of California markets. When builders are sitting on inventory, they don't want stuff to sit. They built it to sell it. They didn't build it just to build it. And so you're going to have some negotiating power. You're going to be able to tell them, hey, listen, it appraised at 550. I know we're in contract at 565. I'm going to pay 550 or I'm going to walk. They're not going to let you walk. They're going to allow you to come in. But if you don't come in with an agent, if you just have someone from their team represent you, you might be, a non-refundable earnest money deposit and in contract at 565, and they just tell you, hey, beat it, right?
Without a doubt, a builder's agent absolutely looks out for the builder. That is a rule of thumb. That's why you want to have an agent that's able to represent you in your best interest in the transaction.
Yeah, for sure, for sure. Anything else to add to that, Mike?
No, that was perfect.
Nailed it, right?
Nailed it.
Oh, you know what's funny? Hey, Wake Dog, you gotta look back at my video I made last week. It was talking about this specifically, foreclosures being up 700%. Patrick Bet David mentioned it. Graham Stephan mentioned it. A bunch of people on YouTube mentioned it, and they could take it in multiple directions. I think Graham Stephan was honest about it. Patrick Bet David, great dude. Valuetainment is amazing. I listen to the guy all the time. Love him, respect him. He's great. When you go from having moratoriums where you can't foreclose, and so literally the numbers like artificially lowered to next to nothing, and then you say, oh, they're up 700%. Well, no shit, they're up 700% because they were next to nothing. I think the number, whatever it was like 40% lower than the average foreclosures per month when you look at like a pre-COVID year. And that's the up 700% number. So that's just like Alex said, it's fear mongering. Some people call it fear porn. Call it whatever you want. Foreclosures up 700% is just moratorium expired. Exactly. And so you just can't put a lot of stock into people being able to manipulate stats. Like there's some great quotes out there on statistics and how you can basically make them say whatever you want. I would be truthful with you if foreclosures were a thing. Foreclosures are not happening. They're not happening anywhere near averages, and they're certainly not happening at scale and flooding the market. The reason why they're not is because people have so much equity. People have hundreds of thousands of dollars in equity. They're going to find some other exit. They're going to sell their house and take proceeds. They're going to, get some sort of, loan in the meantime to make it right. But they're not going to have a house that's worth 600,000 they owe 420 on and foreclose. It's just not going to happen. It's going to take like a 40% price correction before we see even like a smidge of foreclosures like we did during the housing crash. During the housing crash, it was obvious. My house was worth, I bought my house in 06 for 345. And then in 2009 and 10, as things started to crumble, whole different period in time when like they basically wrote loans for anybody and appraisals were fake. Houses were worth 180 grand. Well, people were foreclosing then because they weren't going to make good on a loan where they owed 345 when it was worth 180. But we're in different times. We're in different times where like the average equity position for somebody is north of six figures. So yeah. End rant. Foreclosures.
100%. 100%. Here, I think I even wrote it out. 100%. Right.
Joe does mortgages. Thanks for joining. The cool part about this, man, is I do Q&A. I've got like real estate agents, other mortgage pros. I've got past and former clients on here. I've got all kinds of, people that are joining. So I appreciate all you guys, the fellow mortgage guys as well. Joe does mortgages out in New Jersey. For houses listed less than 600,000, I've seen lines of people at open houses. Is this still happening, Joe? I would be interested to hear, because 3 or 4 months ago, for sure this was happening. Probably in Idaho, Sacramento for sure. It was making the news. And it has been such a drastic turn of events to where you go from houses having lines of people to come in and view it to now like the last dozen transactions I've paid attention to it where like I've got a great team handling the day-to-day, but I can just pull up and see $11,000 seller credit, $9,000 seller credit, $9,750 seller credit on tons and tons of deals where all of a sudden buyers have leverage. In Idaho, the metric you showed from Altos was telling, where it's heading back to a buyer's market when it goes above 4 months of inventory. I'm sure it's going to feel even more so like a buyer's market. So Joe's going to send
started.
Joe, send them to team@mtmg.com. PICSERT didn't happen. right? That's the saying. So I want to see some pics, which reminds me, this is totally off subject, Mike, but have you seen the Netflix special, The Most Hated Guy on the Internet?
No.
Oh, it's disturbing, dude.
The
This
most
guy
hated on the internet.
made a website around like revenge, where if you had a girlfriend who did you wrong and you had some pictures of her that weren't so kid friendly, you would send them to the website, and then they would connect that to her social media profile and basically blast her.
Oh,
Yeah.
oh, didn't they have that at one point, except maybe not as cruel, called the dirty.com or something like that?
Maybe. I don't know.
I thought I remember that. Somebody did that before. I remember that sounded familiar, but that's just
This
wrong.
this was like is anyoneup.com. This guy definitely got shut down. I've only seen episode 1. Me and my wife watched that one last night, but for whatever reason, I went off on that tangent after I said that Joe's got to send pics. They're selling 20,000 over asking. What's going on in New Jersey? People want to move to New Jersey? All right, Joe's going to send them over.
I want to see here real quick. One thing here. Let's see. New Jersey. New Brunswick, New Jersey is one of the 10 slowest cooling markets in the U.S. according to CNBC.
You know what's funny, Mike, is Sacramento and Boise both. We went from top 10 fastest growing markets to top 10 fastest cooling markets.
Oh, I think I might have misspoke here. What I was trying to say is slow. Yeah, slow is cooling for New Jersey.
So they're not cooling as fast as we are?
Yeah, they're not cooling as fast as we are. So New Brunswick is actually within the top 10. It was at number 5. I was like, okay. Because I got that little stat over here where I had all my Alto stuff, and I was like, okay, well, I might as well see if New Jersey is on this list. But yeah, you're 100% right. With Idaho too, we were the fastest, and now we're down to one of the coolest. So, but it'll turn around. It's going to turn around. Well, it's going to stabilize first, and then it'll turn around. That's more than likely what's going to happen in this market.
Cool. All right. Well, I got some work to do. I appreciate the heck out of your time. One more time, I'm going to put up here the link to your YouTube channel. It's in here. I'm going to put it in the description. Mike Petras, your star realtor. I appreciate the heck out of you, man. I'm going to have you back on and see what happens, into Q4 because I think that, like you said, you've kind of watched and followed how inventory goes. Me and you both know that prices in real estate are a function of supply and demand. So we'll see how that goes. Rates have pulled back a little bit. So after going up to 6.25, coming back down below 5, I've got some people asking me, hey, is this gonna create like a little bit of a injection to demand? And really, truth be told, like time will tell. I don't know what the exact inflection point is where it's like, oh, it's 6%, it's not affordable, I'm out. 5%, I'm in. Because everybody's different, all their budgets are different, but nonetheless, we are going to stay, locked in, paying attention to real estate as guys that are walking it, living it, talking it every single day. And then we'll just talk about it online. Hopefully we'll help some people out.
Absolutely. Right. Well, thank you very much, Matt. I really do appreciate being on again. It's really an honor and a treat. And I'm glad to hear that you're doing well and all that. And I look forward to that next time. Hit me up anytime. Happy to help and let you know what's going on in Idaho.
Thanks, brother. Like I tell everybody, until next time, we gonna see.
See you.